Okay.
Voila.
Voila. All right, so, folks,
Do you want to share? Do
Who
you
would
want to
like
do
to
the whole
know?
thing family style and I can just flip through the thing?
up to you.
Do you like to stand or sit?
I like to sit.
Okay.
Who would like to know how to pay less in taxes legally?
I like the legally added.
Okay, how about illegally?
We're not going illegal.
How to pay,
That's a different class.
how to pay less in taxes.
We don't zoom that class.
Right.
That's on the dark web.
How to pay less in taxes. This is what happens when we've all been together now for a full quarter,
That's true. Do we need to change the little video back there so I can see you better?
probably.
I'll just
figure
stick
that
it in the middle of the table and then can.
Why you
post it
sound so
on you or
little.
something.
All right.
Move this
So,
forward.
the tax code, while we move the video around, the tax code is 70,000 plus pages. We've talked about this before a little bit. It's huge, right? And, you know, how many of those pages are actually geared towards paying taxes?
This much.
Even smaller.
Even smaller.
It's like 30 pages or less.
Oh, wow.
All right. So she already moved on. I was taking too long. So
It was the title
All right.
slide, Rob.
What?
Title.
it's called the hook. You gotta get them
Okay,
interested.
go.
They're ready to walk out because of you. All right. All right.
We're used to
Anyway,
it.
so
Is this the family
The
side?
wealthy-
Or is this the family side? Come on now.
the wealthy, you know, they use the other 70,000 pages. They don't. Most people are raised to think that the 30 pages are what matters most. It's not. It's the 70,000 other pages that matter most, right? So we're going to talk about some of that today, right? So disclaimer alert, we're not CPAs, just saying. So this presentation is education, not tax advice. So hopefully you have a good CPA. If you don't, we're going to maybe give you some tips on how to find a good CPA, because just like real estate agents, not all CPAs are created equal, right? Some CPAs you pay to do a functionary role, which is to file your taxes. Other CPAs you pay to be your fiduciary. Which one do you think is more expensive, a fiduciary CPA or a functionary CPA? Fiduciary. And it's not even close in how much they cost. All right? Think about free TurboTax.
Yeah.
Versus, is there any advice on TurboTax about how not to pay taxes? No, there's only advice on how to pay taxes, right? That's the disclaimer. We're not CPAs, but we're going to help guide you to find the fiduciary. Go ahead.
You're good.
And this is for fun only, right?
I'm having fun.
All right, so why does it feel like you work just to pay taxes? So you grind all year, you get a raise, if you get a raise, and then somehow you are actually more broke than before or feel like it. So if that sounds familiar, you are not imagining it. Here's some really depressing news if you want to do the math on it. All right, so if you are a W-2 earner, which is what I was up until last year, right? So 25 to 35% of my paycheck went to loss to taxes every single year. And 10 plus years of your career, if you work from now till you're 70 as a W-2 employee, 10 years of your career is spent just covering your tax bill. So, big difference in being your own business owner or being a W-2 income employee. And again, what Rob said, there are 70,000 pages in the tax code, and most of those are to reduce taxes because they want to partner with you, not collect them. And later on, we'll talk about which thing is taxed the highest. So, all right, Critter,
Yes.
that's you.
Yep. So why does it feel like you work just to pay your taxes? Right? Probably because when you receive your paycheck, especially if you're a W-2 employee, you receive your paycheck and a lot of it's gone. A large percentage of it's gone, and we think, oh my goodness, that's all I do is I work, 1/3 of the year, or 40% of the year, and all I do is pay taxes. So yes, but is the way I would describe that. Yes, that's true, but you haven't taken all of your deductions, and just like Rob mentioned, the important part of doing it legally is to have a good accountant. And there are good accountants and bad accountants. There are accountants that work for you and ones that work, I won't say against you, but not as for you as others. You know, of the 69,000 pages that are there to help you with deductions, they're only concerned about the 30 pages that pay taxes. And that's what you really need, especially as we are, as we're 1099 employees, you know, own our own companies and things like that. You know, how can we get around, how can we utilize those 69,000 pages to save us money? That's really what we're trying to do. So if you look at it, your 30-year career, 10 years, you're doing nothing but paying for your taxes, right? If you look at it that way, and then the $70,000 we talked about with the tax code. So I've never read the tax code, so you know I don't know anything about that. But you know the truth about it is it's not written to take your money. It was really written to give you specific behaviors and reward people who do them. So you give to a charity, you're able to write those things off, whether it be time, whether it be products, or what have you. So those are the kinds of things that you're able to do. Rich people, whatever that classification is, you know, they don't necessarily have a secret loophole necessarily. They just are really good, or their accountants are really good at knowing the 69,000 pages to use for deductions. That's what it boils down to. Okay.
Yeah, so, bless you.
Bless you again.
So the big idea is the government wants to reward behavior, like what Chris said, right? So think about investing, but in particular, like owning businesses, creating businesses that create jobs, building housing, having housing that provides a place for someone to reside. All those are behaviors that the government wants to reward. So that's why there's so many tax incentives, particularly around real estate, is because real estate drives a lot of the economy. So when you think about things that drive the economy, the government's going to reward those who take initiative to build out, basically, and protect our future economy, right? So they give you tax incentives, right? It's not a loophole. It's actually part of the government's plan to let capitalism and entrepreneurship build a lot of what we do. So what does that look like in detail? So specifically, business ownership. So business owners, you know, we all know this, right? You all get tax deductions. So think about all the different deductions you get as a business owner, right? Are you taking all those things, right? Do you have a home office, right? If you do, did you know you can deduct some of your internet, some of your electricity, some of your water, right? Your CPA should know this, right? That's in the part of the code, not how to pay taxes. That's in the part of the code how to avoid paying taxes, right? One thing that, like, you know, surprises me sometimes, like, we know about mileage, right? You either take mileage or you take vehicle maintenance, right? But did you know, like, you can get your car washed and that's tax deduction?
Let me ask you a question.
Sure.
The folks that do sad stuff like DoorDash and Grubhub or whatever those things are, what I've told people in the past, I don't care what you do, but I don't care if you're doing another job and you got a regular job, create yourself a little business, doing something that you can write off and call it whatever, even if you're not making any money. So you're doing some write-offs. To a degree, you got to make money or they tag you. But as a DoorDash runner or pizza delivery guy that gets a 1099 from Papa John's,
Mm-hmm.
should they not also create that little company and have a company that they're expensing at instead of just being a W-9?
So does anyone know, has anyone ever DoorDash before? Is that a 1099 or a W-2 pay?
It's 1099.
It is a 1099?
Well,
Okay.
I think one thing you have to keep in mind, Brian, is if you are going to take some type of a deduction from a particular company, using your example as a Grubhub dude or whatever they call them, you know, you can't buy a a lawn tractor for your Grubhub business. It has to be that you
Same
can
kind of like
use
for-
that inside of your business.
Right.
That you're going to use that inside of your business. So I think you have to watch, yes is the answer, but I think you have to watch what you purchase inside of there.
Yeah, it's gotta be a business-related expense.
Correct, yeah,
Right,
you
yeah.
can't be too far
I mean, if
outside
you're
of
an
your
Uber
business.
driver and you wanna buy,
I can't
bottled
make the new
water
boat
for
up.
the people that ride in your
You-
car,
Unless
that's a
you're selling
business
lakefront
expense.
property.
Unless you're delivering pizzas to the
That
docks.
boat.
Yeah, yeah.
Unless you're
Also-
using the boat to deliver the pizzas.
Also about creating LLCs, as long as it's a single member LLC and it's just flowing through your DBA account, like that's one thing. But just remember, every LLC, you have to also have that tax return separately for those things. So it is additional expense for every new LLC that you have for filing
Yep.
that tax return. So some people go crazy having bazillions
Well,
of
you don't need an
LLCs.
LLC to take business deductions,
Right.
right? Cause you can be a W-2 employee and still take things like mileage,
Mhm.
Yeah.
right? If your job requires you to drive, right? So you can
But
be an
it-
hourly employee or whatever, W-2 versus 1099 and still have business expenses. So,
But some of the things are unlocked by having that LLC or that business.
well, I think the LLC is more about the protections, right? The legal protections, but separate between you and your business.
Yeah, right. It's
Your
the-
business.
It's the protection so that your
Yeah.
company can get sued and the assets inside of it, but
Yeah.
outside of that, they can't come after you personally. That's
So
the advantage of.
business
the LLC.
ownership, that's getting rewarded. Investing, all right? So lower tax rates on long-term capital gains. So it rewards investing, it rewards a lot of things on real estate, depreciation, deductions, deferred gains, things like 1031 exchanges, things like that. And then, of course, job creation. Hiring people can unlock credits and deductions. Those wages become tax deductions, and health care and 401ks and other things you can create all become incentivized to help eliminate taxes for a business
We're
owner.
gonna try to do a little bit deeper dive in each one of
Yeah.
these things as we go through,
Yep,
so.
okay. Buffy,
Alright.
take it away.
So, depending on which one you are, right? So I think a lot of people default back to being the silent partner, right? So they are only reactive and they're just told what to do, and so they feel like they have no choice, and so the government tells them what to pay, they pay it, and it's just everything is reactive as an afterthought. Okay, an active partner is the one that's actually going to understand that, hey, I don't actually have to just take this standardized deduction. There are actually other ways for me to protect and save my money. So you can have two very different outcomes using the same set of instructions, right? So just depending on, are you gonna be proactive with your taxes? This is something that most people don't talk about, is like, hey, do you actually think about your taxes throughout the year, thinking about, hey, what are some ways that I can save money on my taxes throughout the year if you make some different choices, right? Rather than just only thinking about taxes around March when you have to file them. So that's one of the differences between being silent and active. So, is this me too?
Yep,
So your W-2 income is the highest tax rate that you can pay because it's taxed before you even see it. There are limited deductions if you are a W-2 income employee, and it's the government's favorite kind of income for them. So again, these are all basically silent partners that just pay whatever they're told to pay, and they don't even think about taxes other than at tax time.
can I say something about that real quick?
Yep.
W-2
Oh, okay.
Whatever you're getting ready to
is
say.
saving money today, so. It's in motion, Cynthia, really? That's nice. All right, so W-2 income. So a lot of people, so anybody in here have a W-2 job? Anybody?
Yeah.
Everybody's 1099, okay. You do,
I
okay.
had it.
You had it, yeah. All right. So this may be a conversation for someone in your family or your kids or something like that, right? Is it a good idea to get a refund in February or March? Is it a good idea? Is it beneficial to you to get a refund? Chris is over here shaking his head no. So what do you all think? Is it good to get a refund or not to get a refund? If you're a W-2,
No.
okay? You said no. Anybody have a different opinion?
So I always thought it was good, like.
Okay.
I talked to, my sister was like, oh, my mother-in-law, she's always been really good on deductions, they've had a lot of businesses, and like, why do you all want a refund when you can have more money in your pocket? And at the end of the day, I'm not disciplined enough to keep that extra money, it's almost like a small savings account at the beginning of the year that
Yeah.
you get, because I'm not disciplined enough to, have it throughout the year, and so it's.
You, Christy, you honed in on something very important here, right? The word discipline, right? So a lot of people use the income tax refund as a savings account, right? But what is that really, right? You've essentially given the federal government a loan, interest-free, by the way, 0% interest,
Gosh, I
the
know
whole
where you're
year, right?
That's really ticking
I
me
know
off.
where you're going.
Yep. So you've given the federal government your money in advance the whole year while you've been paying, only for them to return that money that you overpaid with no interest, okay? What could you have done instead, knowing all the other classes we've talked about, right? You could have used that money, even if it was $2,000 or $4,000, you could have used that money to invest and grow, have your money working for you instead of working for the government. So if you like giving interest-free loans to our federal government,
Don't
I'm sure
say it
they
like that.
appreciate it, but that's what, in effect, a refund is, right? Now, I say that for W-2 employees because it is different if you're a non-W-2 employee. You may still get a refund because of other, like, cost segs or other things that you did as a business owner to get money back that you couldn't have got any other way. All right? Does that make sense? Okay. Sometimes, yeah, I'm just gonna leave it there until later, but does that make sense?
Yeah.
Right?
No, I mean, growing up, we would look forward to that refund check because that was what we went, if we had any vacation whatsoever, that was the money that we went to
Yeah.
on vacation with.
It could have been a better vacation if we had the discipline. That's why they have like Christmas club accounts, vacation club accounts at banks. Because instead of giving the government your money, you tax yourself like, 0 exemptions, right? Filed, if you're married, then file single, right? So that you get taxed, is that the least amount or is it, I forget which one it is, right? But you want to be taxed the least amount from your paycheck and then use that extra money into an account to then pay for your vacation. And you might get to go out to eat at a little better restaurant than McDonald's because you didn't let the government use your money tax, interest rate.
But again, most people don't
Discipline.
most people don't think
I think
about
discipline
taxes
and fear.
any other time.
That you'll owe at the end.
Too many
my
people-
generation and older was always taught just,
There's an older generation?
you believe it or not.
Just none of them are alive.
Oh.
You gotta dig a couple of them up, but that's the way they were taught was let Uncle Sam get that return back to you and it's a savings account.
Yeah.
And
So you
So-
can pay off your credit cards that you've been carrying since Christmas, right?
yeah, 23%.
Yeah,
So,
exactly.
Question is, so, beginning this year, since I am now a single agent, I've been putting 25% of my commission into a separate account, just to pay taxes at the end of the year. But then I have my husband, who is a W-2.
Mhm.
So usually at this point, his tax will kind of pays my taxes anyways. We're really haven't had to owe anything. So what's the options on that with W-2 and then the 1099 in the same household?
What I would tell you, I'm in the same boat, but what I would tell you is that 25% is not enough to set aside. And if you're not disciplined enough to where whatever you set aside needs to be a separate account that you can't touch. You can't borrow from that account. That's probably one of the biggest things with 1099 employees when they first started, is that they can't say, oh man, I got $100,000 a year. Whoa, hang on, time out. You only can spend about 60 of that, because 40-ish, you get your retirement and different things that you're going to be able to set off on. So 25 is not enough. I would say 30 to 35 is the minimum.
Some
And
of
then-
that may depend also on your family's tax bracket. Like
Yeah,
what your
and I'm
husband
getting,
makes
I'm
a month.
gonna bring that up right now too.
Got it.
One thing about tax brackets that, when I'm talking to younger people, I think they get this in their head, they're like, well, what's your tax bracket? Well, you know, my tax bracket is, and I'll make one up here, 35%. Okay, if my wife and I are filing jointly, it's 512,000 to 768,000. And I'm making this up, I'm like, oh my gosh, you pay, 35%. Just remember, you only pay 35% once you hit $512,451 and over. That gets the 35%. So you're not paying 35% on all of your income. It's only when you reach a particular level. Does that make sense?
The difference of.
The difference
I was
of.
gonna say, it's not retro back to that 500,000, it's.
That's right.
Starts at that.
Yeah, you don't go all the way back and go, oh my gosh, now we gotta make up all of that. So that's one thing that people get a little bit confused about, that it's the step
Yeah, I
up.
didn't understand that until just a few years ago.
Yeah.
So like if you make 515,000, your 35 that percent is only going to be on that $3,000.
Exactly, that's correct.
The
Yeah.
first $29,000 is tax-free, according to our account.
Yeah.
First 29,000.
His name is Brian Hazley,
To
Sellersburg.
For instance, to pay an employee,
Yeah.
the first $29,000 of their money.
That's your standard deduction.
Is
Yeah.
a standard
Standard
deduction.
deduction, yeah.
Yeah.
Yeah, so anyway, I just wanted to bring that up, that sometimes people get a little confused about that, about, oh, you're 35% or whatever your tax bracket is. Well, you're only paying it on, the part above
And
that.
that money that you set aside should be in an interest-bearing account or
Yeah.
some
Yeah.
account that's liquid, so you can pay those taxes.
Yeah, that you can't touch it though. You just, it's
I am
gone.
disciplined not to touch it, I just
That's
need to
good.
put it in a different, that's
Something that's growing.
Yeah,
growing,
and minimum 30.
so,
You don't pay estimates?
what's an estimate?
Quarterly.
You don't pay
Quarterly
quarterly?
taxes.
No. Listen.
Oh, this is their first year. You will now.
Listen, I call this, I'm a casual realtor. Everything I do is for my kid. So if I can be a very practiced, whatever she does, I just kind of mix real estate in between. I haven't even made 20,000 in a year yet.
Yeah.
So,
Okay, well, you just have to.
and my husband's income provides it, and I'm basically
Yeah.
just kind of
Okay.
add to, and I'm this person that's just, I'm good with being a comfortable lifestyle.
Okay.
And for right now, with my kid being 9, that's how we work it. But I haven't
Awesome.
even made 20,000 in real estate in a year yet.
Okay.
So I'm just a casual realtor, but
Yeah.
I am trying to do more with that.
Yeah, because
So-
estimates become something too, and you gotta pay those, and it becomes a real headache.
Yep.
Real headache.
But is it a fair statement that, let me touch on something. When you're just talking about your different tax brackets, and depending on the amount of money you got, your husband gets here and then you get here as a realtor, and then all of a sudden you go even $1,000 over that next tax bracket, you just got hit. Fair statement? With a different bracket.
Yes,
Or-
but you only pay it on the $1,000 you're over.
Yeah, just that little bit.
That's right, because you just said that. All right.
Yeah.
So this
Yeah,
is
so you don't-
old, but this
I know
is
what you're
from
saying.
2022.
Don't
but it
hold
kind of
back income to
explains the
keep you in
brackets
that
a
lower
little bit.
tax
And I was
bracket.
always taught that was.
I did too, Brian. I was as well. That's exactly what I was taught.
Yeah.
Oh, don't make over $50,000 a year. You go up another,
You can really get screwed up, you go to the next tax bracket and you gotta
It
tax.
doesn't-
only on the part you go above it. Yes.
I've
correct.
literally, my kids, when they were teenagers and had their first jobs, they were like, their mother, my wife, said, you don't want to work too many hours because if you do, the government's gonna pay, you're gonna
Yeah.
pay more in taxes.
Yeah.
She's still out?
Yeah. I corrected that behavior, that language.
With
But that was
divorce?
literally, she was telling my kids to work less, so they
Yeah.
paid less in taxes. I was like, you understand they're making less money too. Anyway, that's all been fixed, but it was literally, that was, the quick mindset was, if I work too much, if I make too much, I'm gonna end up giving it all to the government. I was like, that's
Yeah.
not accurate.
So what my husband does is if he thinks, he pays attention to the tax bracket, if he thinks he's gonna hit it, he just floods his 401k so he doesn't hit it.
So he might
That's
not,
interesting.
he might not understand too, just how the tax brackets work, it really
Because
doesn't
I always tell him, he's
matter
always
if
like,
you're
look, I
going
got
over
this
a
huge
little bit.
raise, and I was like, great, your check never changes, because he puts it all in 401k.
Well, that's not necessarily a
That's
bad
not a
tactic
bad
either.
idea.
You're still making the money, it's just being invested automatically. So I
Yeah.
can't fault that thinking as long as the thinking is correct, right? About what's actually happening from a tax perspective, right? So, interesting. Chris,
Yep, I'm up.
four core
Four
tax
tax
strategies.
strategies, yep. Business write-offs, which I'm sure we're gonna spend a few minutes on those. They gave me that one. Real estate advantages, retirement accounts, and income shifting, and how to do that. Somebody, I think Rob a minute ago mentioned if you have your home office, and it's, make it up and say it's 10% of the square footage in your home that you utilize for it, then, theoretically you can take 10% of your bills off of that particular amount. Now there's some, some finer detail rules inside of that, but that is something that you can take a look at. Now, Rob, Buffy, for example, can't do that because they go to the office every single day. So they don't.
Unless you got a wife that works from home.
That's right, unless you're, once again, Brian Hazley, Sellersburg, Indiana. Mileage, that's always something, as a business write-off, you keep track of it every single day, and you write down how many business miles and how many personal miles that you have inside of that. I am not a good one to talk about that particular write-off. Home office, we talked about that as well, and some other things that I think you can utilize as business write-offs that you definitely have to look at. Rob has rentals, Airbnbs, thriving Airbnb business, and do you have a lawnmower that you have to take over there and mow the grass and do all that? I mow my own grasses at any flip house I'm doing. So yeah, do I fill up the gas, my diesel in my lawnmower? I do. And
Could
it's
you
all
pay
of that.
yourself?
Huh?
Could you pay yourself?
I do not pay myself. I'm
And write
pretty
that
cheap.
off?
I could. I most certainly could.
Could I use my camper as my office?
Talk to your CPA.
I do
That was
not.
creative, and talk to your CPA.
Yeah, and talk to your CPA. So
We're gonna
again,
go
I know
about
we've
that
talked
right
throughout, and I've brought
Did
up.
you use your boat? Is that what?
Yeah, he's
Need
using a
to
boat
learn
to deliver
from your
pizzas. If Hazley can get away with
if
that,
he
you
lives
can
on a lake-
definitely,
Why don't you
sleep in
just go
your.
ahead and get my social security number too while you're at it?
Oh, okay, yeah, come get that while you're at it.
No.
Yeah, but I think that, one of the things that we learned about 12 years ago, when we started with our wealth folks, is that we now make donations into a charitable account. And then, like, for example, church or, American Cancer Society or anything we do, it comes out of that account. We get credit for it. Let's just say, like this year, we had a really banner year. I'm looking at the tax bracket. So let's just say we did get into the 35% tax bracket. Maybe we had just an unbelievable year, my wife and I. We could take a larger chunk of money and put into that charitable account because we had a really good year. And if you look at, maybe in 2027 is not a good year, so we lower that amount. Maybe we don't do anything, but we're still able to give to the charities we want to give to on a consistent basis, because when we did well, we took a larger deduction because we put more money into that account. So that's definitely something to consider as you go through. You don't get penalized for putting it in there. It can vary year to year based on what you want to do. For example, my Indiana tickets, or not my tickets, but our donations a portion of it goes through that account. There's a maximum amount you can do through that, but to each charity, but it does flow through that account as well.
So another example of a business write-off that's not on here is the Augusta rule. All right?
Yeah.
Anybody know about the Augusta rule? Okay, so Augusta rule is named after Augusta, Georgia, where they hold the Masters, right? So a lot of rich folks there wanted to be able to rent out their house for 2 weeks, 14 days, and not pay taxes on the income from that. So they got their way because they lobbied the right people in Congress. And now we have in the tax code, ever since, I don't know how long it's been around, but we have the Augusta rule. So it says that if you use your home for a business, all right, effectively, you're allowed to deduct the expenses for that. Now, what does that even mean? Okay, the example that I've been given is, let's say you, for real estate purpose or whatever, you're going to use it for entertaining, like you entertain clients, somebody comes over for dinner, whatever else, right? The cost of that function can all be deducted. Again, not CPA here, right? But here's how I was told you think about it, right? It's not the cost of the space and the cost of the chicken dinner that you cooked. It's what would that cost you if you move that to a hotel. If you rented the room, like a meeting room like this at a hotel, and it was $1,000 for a day, and you had to pay for the TV, which at a hotel is gonna cost you like $250, or you wanna connect it to their system, or you wanna use a VCR, then that's gonna be another $100. All those things, like I want the complete media package, this is what that costs. I want a cost of, I'm gonna have 10 guests, what's the catering cost? Oh, that's gonna be $1,000, so now I'm at $2,500 for one day at a hotel. So you decided to move it to your house to do it. You're gonna deduct $2,500 if you can prove that that's the cost in your area.
This was gonna say,
Per
you
day.
just get a quote from the hotel and then, okay.
So, now, but legitimate, like you're entertaining people, or you're
Right.
hosting a meeting at your house,
Right.
or you're doing something in effect, and you can do that for 14 days.
Mhm.
If you used it for
Up to
more than
14
14 days,
Up to
you only
14.
get up to 14 days.
Okay.
But you would have to tell your CPA, even a good CPA, hey, here's a spreadsheet for the Augusta, I wanna use that as a tax deduction. Alright, could be $20,000, $30,000 in savings, basically a write-off on your income, right? So think about that, that's another business write-off
Yeah.
that's out there that most people don't know about.
I didn't say a word.
Somebody-
I could hear you over there.
It's
Well, you know, Steve, you got Easter dinner this weekend, and you're having family over that you sell real estate to, and friends.
You wanna go ahead and give them the disclaimer? This is Brian Hazley speaking.
Brian Hazley, Salisbury, Indiana.
We're
Well,
moving.
one
We're
thing that could
moving.
definitely
Find us
help
a
you.
house.
One thing that can definitely help
I
you
said,
as
find us a
well
house,
is
we're
get a
moving.
credit card. Get a business credit card or a debit card if you're on the Dave Ramsey and you don't like credit cards. That way you can always track your expenses through that.
Yeah.
Like, I don't put any business expenses on my personal.
And
No,
again, I'm not a
divide, yeah,
CPA, but I
2%.
would say you're not gonna get any of these deductions unless they are very well
Documented.
recorded and documented. So don't expect that you're just gonna be able to get an extra $30,000 to $50,000 of a write-off without really good records to prove it. So you have to be disciplined about that
worth
record.
the work, right, to get that kind of tax credit, right? So, alright, let's talk about real estate.
Okay.
Alright, so real estate equals tax advantage on steroids. So let's give you some examples. Some of these you definitely know about, but let's clarify. So primary residence, so if you were selling it for up to $250,000 individual, $500,000 for married couples, you get, in the sale of that primary residence, that's deducted off of the income that you make from what you bought it at to what you sell it at. And if you did updates, you can add that into the numbers, right? So you bought a house at 200,000,
Okay.
right? You spent $50,000 that you can show with receipts over a 5 or 10 year period, and then you sold it for 600,000.
Mhm.
All right. So let's say right now you bought it for 200,
Okay.
you sold it for 600. That's $400,000. All right. You're only taxed on the difference between 250 and 400. If you spent $50,000 in updates, then your tax liability is only $100,000. So you shifted, you avoided $250,000 in tax liability plus the cost of the updates to the remodel of the house. Make sense?
Okay.
Okay.
And is that, if you live in there for 2 years, is that at that point become irrelevant? Or
No.
is it still added?
No, this is, even if you lived there 2 to 5 years, if your gain at the sale is more than 250 for individual or 500 for married, right? If you lived there less than 2 years and you have any gain, that's a different tax bracket, different tax situation, right? This is if it was your
Short-term tax
primary
brackets
residence.
instead of
Sorry.
long-term. You're
Right.
paying short-term instead of long-term.
Yeah, so, mortgage interest deduction, so that still exists, right? Yeah.
Yes.
Yep.
So deduction on interest paid for the first $750,000 of mortgage debt, right? So make sure you're taking advantage of that. That's like standard, even like TurboTax
I think
stuff.
that's even higher now, because.
Yeah, this was as of December 16th, 2017.
Yeah, that's pretty old.
Yep.
So let me ask you a question.
Yep.
The house is paid off.
Mm-hmm.
Should you have a HELOC on your house so that you always have a mortgage? And you may not know the answer, it's just a,
I don't know the answer, but that is interest on a primary residence, right?
yeah.
I would say yes.
You get a mortgage exemption.
I would
You get
say
a mortgage on it.
yes, just because then you have a lower interest. I mean, you're not gonna pay it unless you use it, right?
Right?
Right, but then you have that pool of money you can draw from.
Yeah, there's definitely advantages to having
If
a
you can
HELOC,
draw
but-
from it at 7% and
Instead
lend it
of-
out at 12%.
So whatever interest you might have paid on
Mhm.
is a deduction,
Mhm.
and you were making money at 12%.
Right, okay.
Yeah.
Let me take that a little bit further on the legality side. Chris Thompson, Critter, is, let's say you have a HELOC on it, it's fully leveraged as high as you can, and you get into some sort of situation that causes litigation, and an attorney goes looking at to see what kind of assets you have, and there is a HELOC that is 80, 90% or whatever, they don't know whether it's fully loaded or not. And so they say, well, he doesn't have anything he can go after. Just a thought.
So you're saying the credit line itself helps
Is a
avoid-
deterrent on,
Yeah.
It's a deterrent that
They
says,
don't know
okay,
how
you
much
don't,
of it you're
if
using.
you've got a zero mortgage on it, okay, there's some assets, let's go after it.
yeah, and that's, again,
First, first you can have that in a trust, so.
that's,
Yeah.
that's where I was going with that.
Question for you, Rob, before you guys do that. So let's say you flipped a bunch of houses, because you know this stuff, right? What's the end game? Because you've got, you must make, you make 50,000 in the first house, you put it in the second house, you keep going, right? You're
Well-
still at the very end gonna get taxed on capital gains when you're,
No.
okay.
No, flipping in, if you're just flipping houses.
Yes,
Are you talking about flipping houses or living in a house that you
no
remodel?
flipping only.
It's
Flipping is
regular-
ordinary income.
Regular income.
It's not capital gains.
It's not capital gains?
That's the same as selling
It's
your
a job. Flipping is a
widgets.
job.
Okay,
So
so.
it's job income.
Okay,
Yeah. So good question, but it doesn't count as like the normal income from a real estate investment.
okay.
That's not true that's not an investor at that point, that's just flipping houses.
You're just
Okay.
doing a job, like a construction worker, right?
Okay.
Yeah,
But
so
if
the
you
money
get
you
rentals,
make,
and then when you sell the rental, that's capital.
that's
gains.
different. Yeah, because
So
you're talking
what's-
about appreciation like that, but in flipping, we don't look at appreciation,
Yeah,
right? It's just a job. I
Okay.
did a job, this is the job,
and you just
what the job
pay your
pays.
crew and yourself, and that's the.
Yeah, and whatever profit is considered income, not profit necessarily.
Okay,
Oh.
okay.
Yeah, so
Okay,
it's
I get
ordinary
it.
income,
Okay,
okay? So if you have a flipping business, it should be separated in a different LLC than your rentals, because
Okay.
those are taxed differently,
okay.
okay? CPA should tell you that.
Okay.
So,
Should.
property tax deductions, so homeowners can deduct up to $10,000, $5,000 if married filing separately for property taxes.
Again, these are old. That's
These are this, I
old
think that's an older
information,
number.
So.
Yep. So, and different states have different rules about that too. So depreciation, so residential rental properties, and structural components can be depreciated by 27.5 years using general depreciation system, or 40 years using the alternative depreciation system.
Which do you
So-
use? What do you use?
I
And why?
typically, I'm gonna cost seg and speed all that up. So.
You're
so
gonna
I'm
do
gonna-
what? I'm sorry.
I'm gonna do a cost segregation.
Well, I don't know what that is.
Ooh, okay, all right. Cost segregation is a way to accelerate your depreciation.
Okay,
So normally, the value of the property and the things inside, like the AC unit and the roof and all that, you
Right.
depreciate over a 27.5 year lifespan of the property,
Okay.
right? What I wanna do is I want to accelerate that depreciation,
okay,
like basically load it in the first 5 years, particularly in the first year when you first do it.
Okay.
So you can get, this is where a business owner or an investor
Right.
might actually get a refund
okay,
back on their taxes. So I can use that money, instead of paying taxes with it, I can use it to become an investor on other things,
okay.
alright?
Okay.
So, if you're gonna sell the property though in a couple of years,
Yeah.
I don't know that I recommend it, cause you have to recapture all that
You do have to
depreciation
recapture it.
and pay
Okay.
it back.
Okay.
Do
Okay?
we know if the bonus depreciation is still in effect?
Actually, it came back in
It is in effect.
fully this year.
Okay.
Yeah, it was 80% last year, right? And it's 100% this year in
Correct.
2026.
What's bonus depreciation?
Bonus depreciation is a depreciation method where instead of taking the depreciation over 27.5 years, you depreciate the largest percentage in the first year.
That's what you were talking.
Because
Okay.
of the housing shortage in 2017, that's when they first enacted this law. So you can do 100% of the land and the improvements within 1 year, and then it goes to 80% the next year, and then 60% the next year, and so on and so
Yeah.
forth.
Okay.
And so a
So-
cost segregation is the process to get that value
Okay.
to be able to turn over to your CPA. So we use US tax advisors. We actually just did this for our storage facility last year.
Okay.
But we've done it for all of our Airbnbs.
Yeah, I did it on our cabin, and it was, I think $600 or something, but it gave me $30,000 of extra
Tax credits.
tax credits.
Interesting.
And the difference between the CPA that's a fiduciary versus just somebody that's doing
Functionary.
numbers, then they're not gonna worry about telling you that.
Okay.
Right. Yeah, there is strong opinions about whether or not cost segregation is a good idea.
Okay.
I think it's definitely an individualized thought process of whether it's good for you based on your current strategies and your future strategies for investments.
Okay.
All right?
Take that a little farther, when you get to my age, in 10 years, and you start selling that off and you do a bunch of cost segregations and then you start adding all that back in, you better be doing some other planning for that, because you're gonna get hit with that, cost seg that you're adding back in.
Okay.
All of a sudden, you're gonna sell off 3 or 4 or 5 properties, and all of a sudden, you're gonna say, oh, yeah,
Yeah.
that wasn't fun.
Right.
So make sure you're planning for that too.
Okay.
Yep.
So,
If you don't have a reason to use, my opinion, all right,
Yeah.
just it. If you don't have a reason to use the money that you're saving in taxes this year, like you want to reinvest in other things,
Mhm.
then maybe it's not necessary, all right?
Okay.
So, that's a thought process.
and then it would be a lot more of a long-term hold situation
Yeah.
on that anyway.
And the cost seg that we did on our storage facility, which was a $1.3 million facility, I think cost us $2,200. Remember what?
I
think it was-
think 22, 20.
So for
21.
a house, it might only be, I think I had a client just do a house that was a $700,000 house on the beach in South Carolina, and it cost her $1,250. So the cost of the report and the process will depend on maybe the cost of the real estate.
And how long you plan on keeping it,
Yeah. Be better for
because it's gonna
long-term.
bite you.
Yeah.
Yep. Other things to mention about real estate is 1031 exchanges. So everyone's heard the phrase 1031 exchange. So
180 days.
That's a legal process, so you
Yeah.
have a 1031 attorney that you would hire. I think
Oh,
we,
really?
Chuck Murphy, you still doing them?
Chuck Murphy's still doing them.
Okay. So it's the only one I know, actually. Do you have anybody that does 1031s?
I've used one guy, but I wouldn't probably recommend.
Do you have to do an attorney to do a 1031 exchange?
Yes.
Yeah.
Why is that?
It's
They
a,
hold the
it's
money.
a
Oh, they
legal
hold
process.
the money.
Yeah.
Okay, all right.
Yeah,
So
it's a
just think
third
of-
party that's holding your money and taking care of it.
For that, was it 120 or 180?
It's 45 days
45
to
days.
identify 3 properties, and
Okay.
then you got up to 100, including those 45 days, you got 180 days to close on one.
What if you found another, a
Now-
fourth one?
Chuck Murphy, you only get to get 3.
You'll get 3.
Yeah.
But Chuck Murphy will turn around, and if you don't find one,
Yeah,
$400 will just refund your money, and you just get to pay the taxes to go on.
okay.
Yeah. So, and that's just a way to delay the paying the taxes on the capital gains, right?
Right, right.
So, and that's okay, right? Because you're gonna use that savings of the money you didn't pay in taxes right now to hopefully invest more,
Okay.
right? Otherwise, you have to cash out, pay the taxes, and you have less money to invest if you're gonna continue the investments,
Okay.
right? Again, going back to my kids' principles, it's okay to make more money and pay what taxes are to be paid.
Yeah.
As long as you've done everything to shield yourself from paying taxes,
Yeah.
you still come out ahead
Yeah.
in this world.
Yeah.
All right. So, all right. That's all I have for real estate.
You're on
I'm
to
on the next one too.
retirement accounts.
Okay. All right. Thank you. All right. Pay less taxes from a retirement account standpoint. All right. So 401ks. We talked about this already. I don't know if everybody was in that class, but we talked about the idea of a post-tax account and a pre-tax account. All right. So again, different strategies are, it's for individuals to think about, right? So if I'm young, I might choose a pre-tax because that allows me to put more money into investment at this moment, right? Because 6% of my income going into a 401k when I'm 23 versus 6% that is then taxed, 6% of my taxable income means I'm got less money to invest effectively, right? Less money to live on, right? So depending on what you're gonna do with that, if I'm gonna be able to earn 12% over time, I'm okay paying the taxes at the end because your tax situation at 59.5, when you were able to remove that money, might be completely different than when you were younger, all right? So there might be, again, talk to a CPA, but there might be reasons to do one or the other, post-tax versus pre-tax, okay? Chris, you've done financial advising before. What are your thoughts on pre-tax versus post-tax on retirement accounts?
You know, it changes so much, honestly, that
I just figured
I think it really goes down to you
Yeah.
as an individual,
Yeah.
what works out the best.
Yeah,
I really do. I think you just have to really sit down and look at the rules, laws, and see how it fits you.
yeah.
Yeah.
Some things to think about from like a traditional IRA, there are in the contribution limits. Like the government wants to keep a lot of the money in circulation. They want you to buy things, keep the economy flowing, so they only let you set aside so much money. In 2023, I don't know if you want to look this up, but 2023, the contribution limits were 6,500. If you were over the age of 50, you're allowed to save more because you're going to need to. You can, and in 2023, it was 7,500. And that number usually has some adjustment every year
Yeah,
or every
it's a
couple
little
of
bit
years.
different now. I don't know that it really matters too much.
It doesn't.
but-
The ideal is though that no, there's limits. You can't
If you're over 59, it allows you how much more? Quite a bit more, or
Quite a
just
bit
a little
more.
more?
Quite a bit
Okay,
more.
all right.
Yeah, but even like they'll tell you like a 401k, if you're a W-2, you can do, go ahead.
I got the answer.
Okay, go ahead.
Under age of 50 is $24,500.
For a
Age
traditional
50
IRA?
and above is 24,800 plus $8,000 catch up.
Yeah.
So quite a bit more.
Yeah.
It's quite a bit difference in the last couple of years. So, one of the bigger ones, like the HSA, the triple tax advantage as we call it, tax deductions, contributions, tax-free growth, and tax-free withdrawal if it's for medical expenses, right? So basically you're using that money completely tax-free that you've earned to pay for medical expenses, right? That would be nice, right? Think about healthcare premiums, but even like just co-pays or co-insurance or whatever else
Yeah,
you
we
might
use
be
them,
using it
yeah.
for. Those are good. The limits in 2023 were 3850 for individuals and families, 7750. I know that's gone up, but I don't know how much it is. So, but the ideal is at the end of the year, if you need a quick tax break on some money, you might. Chris, are you looking that up too?
No.
HSA.
No, I'm actually looking up something else.
Okay, that's fine. The point is, at the end of the year, if I've got if I want $5,000 that I want it to be able to credit towards my tax liability, that's a good place to do it, right? As a HSA account, right?
And there is a limit on that depending on the amount of money you make, whether you
Yeah,
can do it
Correct.
any longer.
you don't wanna overfund that because you
You can lose it.
yeah, you can lose it. So be careful. I would estimate exactly what you know you're gonna spend. So when we used that one, when we had the option of using it, I don't have that option anymore since Roger switched jobs, but we used it for childcare expenses. And so we were going to be paying a daycare when Leon was little anyway. And so when I knew exactly how much it was per month in daycare, I could use the HSA to do it. And then I just basically was paying the exact same amount as I normally would, but I got that 25% back at the time
Instead of paying taxes on it,
everything
yeah.
that I had been
So
paying
it's like
on.
you're
So
just
HSA
discounting all
sees
of
it as
your
a medical expense per se.
Yes.
Okay.
Prescription drugs, right?
Yeah,
If you have
do that, yeah.
medication that you take regularly, what does that cost? That's a number that you definitely want to save because it's like saving 25% on those costs,
Mhm.
right?
Isn't our percentage, because like if we go to doctors, we'll always get that bill in the mail from the insurance. It's like, this is not a bill, this is for tax purposes or whatever. So I saved them, and then when I did my taxes, she's like, well, you have to have a like 10% of your, some kind of percent of your income
Right.
to write
To
off.
qualify.
Yeah.
But if you use a HSA, then
Yeah,
you
we don't have
You're
an
just
yeah.
trying to use
So
that
if you don't have
money.
I don't know if it was 10%,
And it
but
can
she's like,
roll
you have to
over
have
now, too.
10% of your income you had to spend on medical expenses in order to
Does
write it
everybody
off.
have an HSA?
I don't
If
know.
you-
I can't.
I do not.
But if you make too much money, you can't use an SHA anymore.
There's rules
When we sold our
around it.
rental
We can't
properties,
use
all of
it
a sudden, we just went like this and they said no more
Yeah.
depositing.
I was wondering, I can't have one, and I don't know why.
Right.
Okay,
That's why.
okay.
Is that
I
correct?
think that's right,
Yeah.
yeah.
You
I mean,
follow
they just said
Rob's
you
wife's
can't put it
advice,
in.
work less and make less, you won't have to pay taxes.
You get to use an HSA.
I did this parenting,
Rob-
thing. I did
Rob
this
gains a
parenting
vote.
thing all wrong. And evidently Rob didn't pay attention to his wife, because he works all the time.
He
You're
only,
making the assumption I make money while I work.
Yeah, I was just, actually what I was looking up, Rob, when you asked me the question was, when you have to start taking retirement. When you have
When you have to start.
Yeah,
Yeah.
when you have to start taking it.
Yeah.
And that's age 73.
There you go.
So for the last 5 or 6 years, how's that been?
Not there yet.
All right, Buffy.
Yeah.
Let's talk about
So,
income shifting.
well, one other real quick thing. Maybe I'm thinking about it wrong. You can correct me. But if you were a W-2 employee,
Mhm.
say, right, and you know you're going to be taxed and pay at least 25% of your income to taxes, right? It would be a way of thinking differently if you're like, oh, well, if I can put that 25% or as close to it, whatever money I'm putting in a 401k or a retirement account, then I've effectively reduced my tax bill by actually investing money and saving money that I would have had to just pay to the government anyway. Does that make sense? Like,
Yes, I mean, the ideal is that you're doing like a pre-tax 401k,
right,
right? So your gross income is reduced because you pay taxes on your gross income.
right.
Right.
So
Yeah.
that's kind of one of the strategies that you would talk about with your CPA about, hey, well, if you were going to pay the government this money, you can actually put that much money into a retirement account, and then you're effectively lowering your tax bill, paying money
tax
into
liability,
that
yeah.
account instead of paying the government with that,
Okay.
and then it's growing and
You'll end
growing.
up lowering your effective, what they call the effective tax rate, right?
So.
But it's because you lowered your gross income. So if you're a W-2 employee, and you should take full advantage of your health care benefits, those are generally almost always pre-tax.
Yep.
Same for the same reason, right? So,
Okay, alright, let me switch it real quick and then we will talk, if you saw my little video with Leanne, yesterday about hiring your kids. So you can hire your kids as a legitimate employee of your business and have different tax advantages of doing that. So if they, like Leanne did yesterday, he was in a video with me, right? So he's a marketing person for my company. They can take photos or they can fill or package things. If you do golden letters for real estate and they stuff those envelopes, right? You can pay them as a legitimate employee of your company, okay? Now, if you are a business owner and you can hire your underage child as a legitimate employee, this only applies to your kids. You can't hire other people's kids. It's your kid.
can you hire your
Right.
grandkids?
I have to look at that. I don't know.
Yes, you can.
So, they're up to a certain amount, their earnings are exempt from Social Security tax, Medicare tax, FUTA tax, all of that. So basically, as of 2022, which is when this one said, your kid can earn up to $1,000 per month, right? That is, and they're not gonna owe any taxes on that income. So with that income, you could hire your kid, pay them $1,000 per month, but they don't actually ever get that money. That money goes into their college fund or something for them. So then it's a double benefit for them. They have their college fund growing, and it's a deduction to you in your business because they are your employee. So it's a double advantage for hiring your kid.
Do you just direct deposit it directly into that account, or do you have to pay them and then direct it
You
over?
have to show they are a legitimate employee, so they have to fill out a W-4, they
Okay.
have to do an I-9, compensation has to be reasonable for the services, they're not gonna, so you can't pay them $1,000 because they stuffed 4 envelopes for
Yeah,
you,
yeah.
but it is, again, that kind of double benefit
There's
to
not
you.
an age
No.
Up
Minimum?
to 21, is where the FUTA tax lasts. So, but up until
You're
21.
talking minimum age?
Minimum age, yes.
Yeah. I know some people who have used their kids at like age 3 and 4 in their marketing photos. Yeah.
Pieces, yeah.
That's why you see the heating and air companies with their kids and the
And
roofers and
grandkids
all
and
that.
stuff.
When you see the
Commercials
roofing
like
companies
car
and all that
selling.
on TV,
Yeah,
yeah,
Yeah.
that's
Yeah.
one of the reasons they
So-
do it.
And the number goes up
They're an
every year, it's
employee
closer to like
that helps your
$15,000
taxes, you
total
know,
for
you're
the year, I
then
think,
paying
right
an
now.
employee,
It
but
was
you're
last year.
also
So
paying their
what
college
proof,
fund.
so you have to show, you have to do the, you say W-4 and I-9,
Yep,
and then track their work, or how do you?
yep. Just act like they are a regular
Provide evidence of
employee.
their work. If you use them for marketing photos, those photos are your evidence,
Oh,
right?
yeah,
If they're doing something, you just, you know, keep it in a spreadsheet or whatever, and then you just make that contribution into their college fund or whatever on their behalf, and then it's a deduction for you and growing their college.
so do you show like a financial sheet of what they're, like what you pay them? Like, do you have to show that?
I would, again, ask your CPA, but I
Yeah,
would
you got
assume
to-
you'd have to do a
I mean, it's still gonna be on
1099
your-
type thing for them,
Mhm.
just like a regular employee would be. So,
Okay.
My daughter just got a job.
Well, you got a good point, because if your job is to save Uncle Sam tax money, and if you end up picking up another $10,000-$20,000 or whatever, but when your whole family, yeah, it's a job.
So this on the screen is just kind of an example of thinking about taxes differently when you have a strategy or if you don't have a strategy. So person A with no strategy, say they earn $100,000 for easy math as a W-2, and they take the standard deduction and they pay $22,000 in taxes. Okay, so they're keeping $78,000. That's what they're living on. Everything else is paid, right? The same person in a different scenario, right, earns the same amount, 100,000, but they have a side business, they max their 401k out, like I was just talking with Rob about, and they deduct their home office expense, so they're only paying $14,000 in taxes, and they're keeping 86,000. So same income, I don't know that they did the math right on that, but that difference every year for life adds up pretty quickly.
That's right.
So person B is an entrepreneur, right, entrepreneur, yeah.
Yeah. So even if you are a W-2 employee, by just creating that business, like Brian was saying, you can save up to $8,000 a year or more, depending on what that business is, and year over year over year, that adds up pretty quickly. It's not just about what you earn, it's about what you keep.
Yep. All right, Chris.
Yep, all right, so we know some people may say unfortunately, in business with the government, some don't have a problem with it, so where you stand on that. But, you know, like it or not, they are a business partner because they're taking some of our income, and they do whatever they damn well please with that portion of it.
Did you want me to stop recording?
No, that's okay. Sorry.
What's your address?
Yeah, Brian Hazley. You know, it's just a matter of how involved you get with them, is really what this whole thing is how involved are you with them to make sure that you're getting all of the benefits that you can, out of your business, and out of, keep as much money as you can, all year long, as you legally can. And then, you know, there's, you know, the different tax buckets, that you have. There are so many rules and laws, inside of each one of these, to help you. I know Brian talked a couple of months ago or so on the energy. He's into a new thing with the energy, bucket, that brand new to me. I don't know anything about it, but I know that's a way to be able to save some of that, as well. Probably everybody around the table is definitely into the real estate side of things. And if you're not into it personally, you at least have clients that are, and you understand that. Agriculture, I know those laws have changed a little bit. You used to be able to put a cow on a property and all of a sudden you were a farmer, but I know that those rules have changed a little bit because some people took advantage of it. So those have changed as well. I probably personally need to look into that more, now that we have 50 acres and all of that. So I probably need to look into that, a little bit more.
And I'm also like solar energy, right? Like
Yeah,
it's
yeah.
never a good idea to put solar panels on your personal house, but if it's a rental house, it does give you tax advantages. So you could get the 30% credit and depreciation of the equipment of 85%. So, but it has to be a business, not your personal. So
Now, make sure I understand, because the resale of a house that has solar, you're really not gaining anything for.
you are
correct?
basically doing it for the tax
For the
credit
credit
of it.
only.
Yeah.
Okay, that's what I wanted to make sure.
Regardless of the people that have it on their house to tell you how much
Okay.
money they're making off of
Right.
it.
Yeah.
That is why you would never see me say, oh, it's a great idea to do it for your regular house, but as a business thing, for a tax credit that you are looking for, it is not a bad idea.
Didn't know that.
Would it be a long-term holder or something you could sell in 5 years or?
It just says business or rental property, so.
Should we be
Well,
doing
So
solar
the
right?
government,
I think you gotta take
as
into
of
consideration
2022,
Because whatever it costs you to put them up there, you're not getting that back in the sale of the house.
Right.
If you spend $30,000, it doesn't increase the property value
Right.
30,000.
Right,
And I have
so
no idea how much
if a
solar panels cost.
homeowner put solar panels on their house, the government is gonna give them 30% tax credit. So if you install $10,000 of solar panels on your personal residence, you're gonna get $3,000 of that back.
Okay.
But if you install solar panels on your rental property, you get 30% credit and 85% depreciation. So if you install $100,000 of solar panels on your business, you'd get the $30,000 credit and $85,000 deduction that's worth another $35,000. So in the end, the government would be paying for 2/3 the cost of the solar panels. Again, you're still paying that other third cost, but if you're looking for ways to offload some of your expenses, that would be another way to do it.
Didn't know that.
That's a hell of a lot of square
Well,
footage.
I would tell you that when we cost-seg our storage facility, we have like 9 or 10 solar lights. Just solar lights on the building, and we got credit for whatever the market price of those solar lights, even though they were there for 10 years or whatever, 8 years. We got credit for the price of those lights in today's dollars for every one of them. They were just little rinky-dink solar lights, but he had to go around and take pictures of each one because he said all of those are worth money from a government standpoint. So whether they were working or not.
Had no idea.
So go buy broken solar
Wait.
and put them on your.
Some of them have been there for a while. They're a little
Your
faded.
name is Christie?
All right. So, key takeaways. All right, we're wrapping up here. So, it's not about earning less. It's about structuring better. You need to make less money to pay less taxes. You need to have a smarter plan. All right, the tax code is a rule book and it's available to everyone. I would say this about like CPAs. So I had a CPA when I got into real estate. I did TurboTax for, I don't know, 10 years, 15 years. Did my own taxes effectively.
Me too.
And then I got into real estate and I thought, I started an LLC. I need to go ahead and think about a CPA because I'm hearing things by attending meetings like this about S Corp and all this. I don't know what that is, and nor
Right.
does it make sense when I go read it because it's a lot of legal mumbo jumbo, right? To me at the time. So I hired a CPA. That CPA was much more of a functionary than a fiduciary. He was willing to set up my S Corp and educate me on what that was. When I started buying rental properties, he said, you need to fire me because I'm not interested in learning about how to give you all the tax advantages that those properties are going to provide you. He was a business CPA. He wanted to file taxes for my business. But when I started becoming an investor, he clearly said, this guy in Clarksville, he clearly said, like, I'm not gonna do all that for you. Like, I'm not gonna, if you start doing cost segs, I'm not doing that for you. I'm not taking care of that stuff for you. So he deselected out of my life when I started becoming an investor, all right?
So how'd you find yours?
Well,
Or should
We've
I
gone
wait
through
on that one?
several. No, this
Ah.
I like the guy that we use now. Every CPA has their ups and downs. We have very complicated taxes, so I don't know that there is anyone that can do a perfect job on them.
that's the thing, right? So you get what you pay for, right? The structure of your businesses, not only for legal protections, but for tax reasons, also you need to consider that. So you want someone who believes that they are a good tax strategist, right? That's gonna meet with you at least twice a year, but really probably every quarter.
Okay.
And give you advice on what you should be doing with your earned income so that you can shield yourself from taxes, all right? So, and you need to, he needs, your tax person, he or she needs to know your plan for the year. Like, what are you gonna buy this year? All right, what are you gonna invest in? What are you gonna sell this year? And what does that mean? All right, you can't just willy-nilly say, oh, I think I'm gonna buy a storage facility, or I'm gonna buy a rental house, or I'm gonna sell one of those properties, all right? There needs to be a reason, and your CPA should be in on that conversation, all right? So a good CPA is gonna say, okay, well, that's gonna cost you blah, 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 this much money if you do that, so here's a way to get rid of that tax liability by doing this, all right? So they should be well-versed in 1031s, they should be well-versed in cost segs and depreciation and things like that, Augusta rule and different things, but again, you're gonna pay a decent amount of money for someone who is a fiduciary, right? Like, we were paying $45,000 a year for 9 different businesses at first, right? Now, I ended up firing that CPA because they didn't deliver on their promises. Like, I wanted P&Ls at least every quarter. I wasn't getting them, all right? And the meetings that were supposed to happen every quarter, they were happening once a year if I demanded it.
Right.
Like, it was just not worth, you know, I was paying the extra for the extra strategy and advice.
So how did
Okay?
you find a better CPA?
Keep asking questions to people. Like,
Yeah.
who do you use? Who do you use? So
Yeah.
we use a company out of Simplified Tax Strategies. They're out of Michigan. So
Is this they virtually meet with you and things like that?
It's still more of a functionary, but not as much of a strategist, but we learned
knowledge
a
is
lot
there.
from the strategy.
Yep.
I want to add to that is it's not only the CPA's responsibility to advise you as a fiduciary, but it's also your responsibility to learn what you need to be asking and what you need to be looking for. Because if not, you may not be getting the right or correct information that we've all experienced, and we've all had our ups and downs with CPAs until you start learning and taking a part of your job is to learn some of that, so you know what questions and you know what you need to be doing, instead of an advisor or a CPA just say, well, just do this, that.
Yeah.
May or may not work. We just went through an exercise with our group, and I threw things back at them and said, I want to look at this, and they come back and said, well, that's a great idea. Oh, you start understanding the tax opportunities, and I think you'll be tickled to death that you start learning it.
Think about paying taxes as a game, and the winner of the game is the one who paid the least amount of effective taxes, not dollars, but in percentage, right?
Right.
So the game is to figure out how to use that 70,000 pages to your advantage, right? 70,000 pages. Think about how much that is,
Yeah.
right? For a CPA to know everything in that book, that's a challenge, right? So I think about a CPA that has a team that's going to have other people that have specialties, right? So does that make sense?
Mhm.
Right? Because I don't think one person can possess all of the knowledge that we need, but if we decide to let that person dictate our tax rate, then we've allowed them to control the game. We control the game.
How?
So-
Well, Okay, I'm gonna jump back in for a minute, because do you know who can know immediately, effectively 70,000 pages without any problem whatsoever?
Well, that's
AI.
a great.
AI.
Yeah.
So you can use AI effectively to help you have strategic conversations, because you can tell AI all of your specifics.
I would use AI to develop the interview questions for my next
Correct.
CPA,
Okay,
right?
that's a good idea.
So I've got a couple of things you should talk to your CPA about, but again, this was written before I know as much about AI as I do now, and I would 100% be using AI to say, hey, I want to strategically develop my tax plan. This is what I have. Let's look for all of the questions that I should be asking my CPA. Let's look at all of these tax codes that I might not know about. Which one should I ask about? Which one should I qualify for? What questions do you need to ask me? And have a conversation and use AI as your strategic thinking partner, and have it ask you 100 questions about your tax strategies, and it can come up with a really good, solid, plan for you to present to your CPA, or all the questions to know if they can help you effectively. So
I'll illustrate that.
Yeah.
Something you did for me.
when I forced you on the ride home. See, Chris, this is what you get to look forward to.
So in November, we were driving back from Columbus, and Brian and I were in the middle of a tax appeal on the property taxes for our Schwartz facility in Salem.
Okay.
Right? And I thought that Brian and I, through conversation, had come up with all the different things we need to think about in terms of that appeal. Like, what are the different expenses that we can justify that will lower our effective tax rate for property taxes, right?
Right.
So Buffy decided, well, let's just ask ChatGPT. So while I was driving in my truck, we turned on the microphone on ChatGPT, which happened to be like an Australian accent. I don't know how she did that. So for an hour and a half, it just, from all the way from Columbus to Cincinnati, it just kept asking me questions. And I mean, we had a good prompt, which was, I'm paying this much in property taxes, this is the facility, and we're going through an appeal process, and I want to figure out all the ways that I can find to pay less taxes for property, for the property tax, whatever. And for an hour and a half, literally until I said, turn it off, I can't do it anymore, it kept bringing up new ideas, right? Well, have you thought about this? And sometimes it was, yes, I've thought about this. Great, so you're on the right path. Now, how about this one? How about this one? How about this one? It was endless.
Now, let me ask you a question with that thought. Could you turn AI on and listen to our conversation and respond to that conversation?
Yeah.
Oh, hell.
100%.
Don't look at me like that.
So I don't. What
does
time
that
is
make
it?
sense?
My watch
Yes.
died.
2:40. Yeah.
Okay, so a couple of quick wins that I would say that you should just write down to at least check into, right? Check into, if you qualify for an HSA, you should max it out to the extent that you're able to use one. That would be a quick win. Number two, if you're looking for tax shelter kind of things, look at opening a IRA or some sort of a 401k or something, so you have that ability, self-employed IRA, or a self-directed IRA, something like that, so that you have an avenue to put investing funds in that are then protected. Using the Augusta rule, hiring your kids, and reviewing whether or not you should take a cost seg, especially with the bonus depreciation going back up to 100% this year. So those are some quick wins. If you haven't ever looked into any of those things, you should look into those things. Here are some questions that we had about what you should ask your CPA. Asking, and maybe ChatGPT first and then your CPA, or if you're interviewing a new CPA. So, am I structured properly to reduce taxes? Should I be taking depreciation? Can I qualify for bonus depreciation? What can I write off as business expenses? Should you use a 1031 exchange? Talk to him or AI about hiring your kids or your spouse in your business, and how you can fund retirement and reduce taxes at the same time. I would highly recommend these 4 books. Rich Dad, Poor Dad, Cash Flow Quadrant, which is Rob's 2 favorites, especially Cash Flow Quadrant. I really like Tax Free Wealth. by Tom Wheelwright, and Win-Win Wealth Strategy. He's the one that wrote most of the ideas that we're talking about today.
Yep.
So those two books, especially Tax-Free Wealth and Win-Win Wealth Strategy. And if you are going to have a conversation with AI, I would for sure mention those two books by name and just say, hey, I would like to explore some of the ideas in Tom Wheelwright's books and look and see if any of those are ways that I could save taxes. You falling asleep on me over there?
No,
Okay. You can also use AI to help you with your tax prep and savings. So you could automate your expense categorization. You can summarize all of your documents for your CPA. It can review all of your past returns for missed deductions. So maybe you put all of your past tax returns into AI and say, hey, look and see if there's any deductions that were missed.
Scan those in, or is that
Yep.
what you do?
Yep.
Would you recommend ChatGPT as the one best to?
I would use whichever one you're most comfortable with for
Is that-
for
is
having
that
a
fiduciary?
conversation.
Yeah.
But you gotta purchase that one to kind of get that many pages in there.
Yes, it's not gonna
how much is
remember
ChatGPT, do you know?
it. $20 a month.
Okay, cause Grok is 30, I think, or something like that.
Yeah.
My sister just said there was a ChatGPT option of like $8.99 now, and 20. I was like, I didn't see that.
There might
I'll
be.
look
They're
into
coming
that.
out with new ones all the time.
Yeah.
Different ones are used for different reasoning type skills, so it
Yeah.
kind of depends. I can send you a prompt. I've got this prompt saved, so I'll send this out in the follow-up email. That's just like a specific AI prompt that you could use for looking at your taxes this year, savings, deductions, things like that, and that could always just start off your conversation. So there's lots of fun ways to use AI for something that's maybe not as fun, which is taxes. Anything else you want to add to that?
Nope.
So
So, is helpful today?
Yes, the last few sheets that you used, I was wondering if I could get copies of those in some way. Oh, thanks.
There you go.
Okay.
here, I'll give you